Welcome friends, traders and investors. In this episode of Trading System Lab, I'm going to show you a strategy, the Open Range Breakout System. I show you exactly how I do it and how the results are. So take a look at it. It has some really good results on URNM. These are the results here, so just so that you get a feeling. In the past 5 years on URNM, the drawdown is reasonable. So that's a pretty good performance, I would say. What is the rule? We take tomorrow's open and add 0.5% to it. So we buy if the market goes up after the opening price by 0.5%. And then we wait for the closing price. Once we have the first closing price, we're going to put a stop there, 0.5% below that closing price. If the close is lower than the open and the market goes down, then we're going to be out at 0.5%. But if the market goes up, every day we are going to adjust the closing price. It's kind of a trading stop. Let me show you on this chart here what I mean. Let's zoom in a bit and you see it's the URNM. We have the entry signal just 0.5% above the opening price. The opening price was 48.81 and our entry was 49.05. And then we wait for the closing price. The closing price on that day was 49.75. We have a stop here. You see the little red dot? That's where the stop is, which wasn't triggered on that day. The market moved on, went higher to 50.59. We put a stop at 50.34 and we got actually triggered, which is 0.5% below this closing price. We got filled on this one. After all, we made a profit of 2.62%, which is a good number. You can actually see that it's trading frequently. Every other day it's trading. Why does it actually work? In my opinion, it works on stocks or ETFs that are very volatile, who have strong movements like the URNM or the URA, which I'm going to show you at the end. And that's when it produces a good result. There's no other filter in it which might actually improve the results, but I left it at this. You can use it immediately. You don't even need a computer for that. You can do it on your mobile phone. Let's take a look at the results. From 100,000 about 5 years ago, it made 4.7 million. That is because it made over 130% annualized return. It has an exposure only of 48%, which is like it's in the market half of the time. That's what the exposure means. We had 361 trades and an average profit of 1.16%. The drawdown was only 25% compared to the buy and hold, which was also the uranium or URNM, which was 42%. 204 trades were positive, which is about 56%. Let's go through some key screenshots. This equity curve is fantastic. The drawdown is very good. Look at the green line here, how many days you have been in a drawdown, which is not a lot with the strategy, but is a lot with the buy and hold. Here we have some screenshots from the performance report that give you a different perspective to the results. And interesting enough, as you can see in the seasonality tab, in September was the best month of that. Now you want to know, how did we actually do this? So I do the rule now, so you can follow it if you have Volatile. It's very simple. You go to building block, new building blocks. You've got the standard settings here, which we can actually delete by add, limit or stop. We put that on top. We take this away and then we take this away and sell at limit or stop. And here we go. We buy at stop 0.5% above tomorrow's open. Next session open. There we go. 0.5%. And then we sell at stop at 0.5% below the close. So here, on this day, you have to wait. You have to be there at the open to place your orders. Once you are in a market, then you can actually, you get the closing price. You have about 15 hours or 10 hours at least to place the orders. So this is all it took. You see, there's no filter, there's no indicator, nothing else. You can make some change. Obviously, you want to change the symbols here, and I take URNM, which I want to use as my benchmark. I change my money management setting to 100% of equity, so I use 100%. Every time I get a signal, I put all my allocated money into this one trade, and then I run it. And here you go. We had some data updates, so we have some new data. It might be slightly different to the one that previously had. And I promised you to show you, because this only had 5 years of data. So I promised to show you URA, which is another ETF which has been around for a longer period. Let's see. So we quickly run this one for 10 years. And let's see how that goes. Here we are. Wow, that's also pretty good. It's only 37%, but making around 40% every year for 10 years brings us to 2.3 million as well, which is an extremely good number. Always remember, keep on testing and trade smarter.